return on equity says, what has it done for me lately? If it's costing me a lot of headaches, and when you start looking at the equity in it, like for an example, portfolio I bought had a $750,000 equity position. I bought it for $600,000 and had $750,000 equity in it, but it was only pulling me in about $20,000 a year in cash flow. So think about that. $750,000 is only pulling in $20,000 a year.
Welcome to the Creating Wealth Podcast, where Kyle Curtin takes you on an extraordinary journey alongside renowned multifamily real estate sponsors and syndication experts from every corner of the United States. We teach you how to harness the power of passive real estate investing and witness the transformation of your wealth building strategy. Let's create wealth together.
What's up, guys? Welcome to episode 126 of the Creating Wealth Podcast. I am your host, Kyle Curtin. I am a co-GP specializing in investor relations and capital raising for multifamily sponsors. Today, we get the great pleasure of chatting with Gualter Amarello, a very impactful, financially free real estate investor, the alchemist behind the Alchemist Nation community, which has been, I love the guns, man, hell yeah. The alchemist behind the Alchemist Nation community, which has been a large part of his quest to building 100 millionaires. He also hosts the Alchemist Nation podcast. What's going on, man? How the heck are you,
Kyle? I've been looking to get on this podcast for a long time, ever since Tommy said that, it was available, it was an option. He set the bar for it. It took me months and months and months, but it's good to finally be here.
I love it, man. I know it's hilarious. And there's a lot of people who probably know of like one or two of the couple of us that are like, what the hell are these guys talking about all the time? Like giving each other crap about like some show or something. Yeah, it's hilarious, man. It's awesome. Yeah, super pumped to have you on here, man. Let's jump right in, kind of tell people about your backstory, your origins, up to, kind of where you are now, like your vision for the future. The floor is yours, man.
All right, cool. So obviously I started investing in Massachusetts like yourself, but I wasn't investing in one of the nice cities. I was investing in Fall River. So if you're from Massachusetts, then you already know, like, oh, okay, that guy. So I was basically buying like houses in the worst neighborhood in the worst city, and then I was buying the worst houses in the worst neighborhood. So it was just like a lot of work early on. Or before that, I was an accountant. So like went from accounting to real estate, which it turns out a lot of guys did. But in between that, I went through a pretty nasty divorce, which really just like flicked the switch in my head and just said, screw all of this working and like hating my life and working for like other people. I said, we got to go get financially free. So a lot of people ask how I got into real estate. And the answer was I just was like greedy and tired of work. Like I was just like greedy and lazy. And I wanted to make a lot of money. So like all of this like heartfelt stuff I do now, all the contribution, the charity, like the giving away and training, that was later. That came after money.
Mm-hmm.
So yeah, Alchemist Nation is it's an interesting project, right? So that's one of the things I'm known for is being the real estate mentor, writing the books, broke to $250,000 names on deeds and get the deal. And I wrote all of those because I was asked a lot of questions. And I'm sure you get that too. I know Tommy gets a lot of that. Is like question. Like, how do I do this? How do I do this? And I just got tired of like answering all the questions. So I started writing books, and it became like, hey man, can you coach me? And for years, bro, like I said, no, like, no, I'm not a coach. Like, swear to God, like it was Gualter, not a coach, Amarello. Like that was just the game of like how I operate. Like I'd be teaching, I'd be training. But that's because I was always recruiting. I was looking for deals, right? Looking for deals, looking for agents, looking for people to bring me properties, looking for capital. And that's kind of how Alchemist Nation started. It was just like being a big real estate investor looking for more contacts.
Absolutely, man. I love it. And the relationships tying into this giant environment are freaking everything, man. And it's definitely kind of a big proponent in like different directions that you're going to go and that opportunities and doors that open up and that type of thing. Relationships are everything, guys. Absolutely.
Relationships, understatement of the century. Actually, I learned this from working with Tom. It was if you run an event, that's for networking around real estate, people will show up. Like, I just, posted down in Fall River, literally middle of nowhere. And I was like, hey, South Coast Real Estate Investors Group. And before you know it, like 3 guys showed up. Me and my business partner at the time were just like, damn, this is cool. Like, look at this. Like, we're not alone anymore. Like, we can talk about real estate. And we're kind of going around the room, right? And before you know it, we realized, like, these guys don't have any real estate. We're the only ones with properties. We had like 42 at the time, with 42 units. And the guys were just like asking us a bunch of questions. So we were like really not interested in being the guys. We really just want to be the guys in the room. We wanted to not be in front of the room, we wanted to be in the room. And it did come from networking, though. Like, all of what I do now came from just a desire to connect with other guys and like find out like what's going on. But yeah, you're right, man. Your network is your net worth. The more connections you have, the more deals you can do. Like Grant Cardone says, contacts equal contracts, right? So we just keep trying to get more contacts. And now Alchemist Nation's got 364 events across the country because, business real estate professionals they needed a place to network, and it just started like taking off. And it's, so yeah, networking, man. It's funny you said it, because that's like all my life is now.
I love it, man. And there's a couple things that I do want to kind of poke you on there.
Yep.
And so how do you feel about being in front of the room versus being in the room from like a networking perspective? Because it's really interesting, like when I have this kind of conversation with people, because like for me myself, I love being in the front of the room, and like have a little bit more anxiety being in the room. And like it's tough for me to just go up to you like randomly and be like, oh hey, like, what do you do? And it's like, it's weird, right? Because like I freaking love networking so much, but in like through different capacities, so I'm kind of curious, like, how you feel about that from that kind of standpoint. Like, which do you kind of prefer? Which like maybe not as much, but kind of like, what do you think about that, man?
That's a good one, bro. Like, it all depends on what I'm looking for. Like, if I want to raise capital, I want to be in front of the room, right? I want to have as few conversations as possible. Just be like, hey, give me your money. If I'm looking for a deal, I want to be in front of the room, right? I want to be like, hey guys, this is the sort of deal I'm looking for. When I'm looking for deeper relationships, like connections, like, or even like feeling out whether I even want to be on a stage, I want to be in the room and to feel out the room, like go and talk to a couple people and see like what's going on. When I was at 10X, I talked to 138 people. I got all their contact information. I use a CRM. I just went in with Alchemist Connect, like plugged it in, and I got all their contacts and then followed up with everybody. Like, weeks afterwards, just like figuring out who I actually want to talk to via text, and then booked like 20 calls with like champions, players, like, big level business owners. So like, to answer the question, I love being in front of the room or not at all. Like, I do not want to be in the room unless I'm in front of the room. But because I run a community of networkers, I don't ever seem to have an opportunity to be in the room anymore. So I kind of miss that a little bit. As soon as if I walk into one of my events, like the microphone's in my hand, I've got to share a little bit about what we do, why we do it. So I've kind of lost the ability to be just in the room, which, appreciate it while you can. It is nice to sneak in and nobody know who you are, which doesn't happen in the real estate space for me anymore.
That's interesting, man. No, I like that a lot. Absolutely. And the other question that I did want to ask you about that is, it always like extremely fascinates me, and it's incredibly impressive to be able to have the model that you guys do with the meetups, and spread out to like, across the country, man. Like that event that I was at in Newton, the time that we met in person. Like looking at the map, like the almost like a heat map of like all the meetups all over the country, I was like, holy shit, dude, like damn, you know what I mean? Like, so how did that kind of like come about in a sense? Like, did you kind of start like the Fall River meetup that you kind of started off with originally, and start to kind of just spread to like different markets around Mass, and then like things kind of like took off in different markets, or how did that kind of go?
It was organic, man. Like, I know everybody says that, but it was like really accidental. So at first we were hanging out, we had our event, and I started going to other people's events, and I started making friends with the leaders of those events. And before you know it, we were just like, their events would die. Like, they would just like be like, okay, I'm done with this, and then like, what is going to happen is they start texting, calling other guys who run events, be like, hey, will you run this for me? Well, do you know somebody? And I just started saying yes to everybody who killed an event, who's like was getting tired. Or I text somebody like, dude, like what happened? Like I showed up, nobody was there. It's like, oh yeah, we canceled it. Like what's going on? So
Thanks, man.
we just started picking up existing events and we just renamed them. We just started shifting the name over. And that's kind of how it started. And then our community wanted to, like, I trained a lot of real estate investors. They were like, dude, how do I raise capital? And I was like, well, I run events. Like, you want to raise capital? Here's what I do. I call it Business Real Estate Professionals Network of insert Tampa, right? Insert Orlando, Columbus, whatever. Like, and then I just bring in all the business real estate professionals who have networks, financial planners, attorneys, lenders, realtors. Like, you bring all the people in who would have a network of people who have money and have conversations.
I love it, man. No, it's and that's something that I do really like, man, right? Is like the concept of like hosting some sort of party. And I first learned this from Gary Vaynerchuk like a while ago, like listening to his podcast of like be that cool guy in high school that like hosted the party that everybody went to, you know what I mean? I was never that guy. But anyway, you know, like the amount of like I don't even know like what the right word is, man, right? But like whether it's hosting a podcast, whether it's hosting events, like webinars, like the things that can happen and the relationships that can be created relatively easily just from creating a platform and attracting people to that platform and like kind of being the host of whatever it is that you're doing, like things just kind of happen, you know? And like, 'cause exactly, man, like, you know, other investors in the area that like, you know, might have been just so used to like doing things themselves for years and years. Oh, all of a sudden, like there's this group of people that share the pain that I'm going through. Like we should be friends, you know? And like, yeah, there's just like, there's so much power behind it, man, for like so many different reasons of just being that person to bring people together. And that, like, that's the thing, man. And I'm curious your thoughts on this is like, even like being earlier to the space, like for me with the syndication stuff, like super early, you know, like you don't necessarily need to be like an expert to start bringing people together to talk about that concept for the first time and like learn together. You know what I mean?
Yeah, I think that's one of the fallacies that a lot of people get in this space is they're like, oh, well, I don't know anything about it. It's like, dude, I know anything. I just brought speakers in, right? I just brought in a financial planner to talk about syndication, not syndication, talk about cost segregation. Like, I don't know anything about cost seg. I want to learn about it. So I just asked the community, hey, what do you guys want to learn about? They're like, well, we need cost segregation. Like, cool. Financial planner. Can you talk? Nope. Can you talk? Can you talk? I just found somebody who could do it. They came in and now the whole community understands cost seg. What's next, right? So like there's only 12 months of the year. So I only got to come up with 12 topics, 12 professionals. And yeah, I don't have to do much. You know, just be the host, right? Be the disc jockey. Like, okay, next coming up, we got. So it's people overestimate like how much work we're doing. The follow up though, I'll be real. The follow up is a lot of work. Like we use a CRM that really like cranks out like texting, hey, how are you doing? What's the story? You know, how's your deals? Like, what's your biggest challenge? Like it just kind of automates a lot of that data driven information so we can like make the best speakers happen, make the best events happen. Yeah, it's not simple, but it is also, it's not easy. It's simple. Like the concept is easy.
Yeah.
But you got to do it, man. You got to run events or be at events. And even me, like I wasn't always running events. I was volunteering. Like Boston Re, I took it over because I was a volunteer. Like I was just there every single month. I'd show up an hour early. I'd help them set up. I'd be an hour late. I'd help them pack it all down. And that's how we ended up taking the Boston Real Estate Investor Association over for 3 years until I just retired from it last year and passed on to somebody else.
Absolutely, man. Yeah, it's just that like just giving value, you know, and in different facets. And exactly, that's a really big tip in itself, man. Is like one, you like get to know the find a way to be able to give value to the hosts of like these events.
Yep.
You know, and like those relationships especially can be pretty strong. But yeah, like just in a way, like just being present, you know, even if it's like you said, you know, something as simple as like, oh, you know, just like I'm gonna help you clean up, you know what I mean? Like, you know, a couple extra sets of hands, you know what I mean? And all of a sudden you strike up a conversation and have a couple drinks after that. It's like, oh shit, like, okay, you know.
That's it, dude. I was doing, they put me on tag duty, right? Badge duty. So I was sitting there like, hey, what's your name? Sure, found, like, but I was connecting with everybody, remembering everybody's name. Like, it gave me, gave me an awesome spot. Like, what do you do? What do you do? What do you do? Now I know everybody in the events, and it's like they're happy, they had fun, but I now know who I'm targeting, who I'm going to go have a conversation with later. Like,
exactly,
man, like anything. I mean, volunteer on any level at these events, and you got an opportunity.
Absolutely, I love it, man. So I am curious, man. So when in your real estate investing journey did you get to the point where you started bringing in debt or equity capital? How did that kind of first story go?
Day one, like 2008, I bought my first house. I bought it with a partner. So like, I've never bought a house alone. Like, everything I ever bought had somebody in it. That partner happened to be my girlfriend at the time. So, she brought half the money. I brought half the money. We did an FHA. So it wasn't a lot. It was like $8,000 I had to bring. She brought $8,000. So early in the game. Then we sold that house. We lived in it for a year, took that $34,000, bought a 3-family. And then I think we only used like $12,000 to buy that 3-family at the time. Like, that was our down payment because we owner occupied it. But then next door, a 2-family came up, and we ended up picking that up for $109,000, $25,000, $28,000 down. So like, we kind of just took one house and bought 5 units with it. Like, basically within 6 months, we went from one house to this other house, these other 2 buildings. And after that, I ran out of money. And so like, the game was over. I was like, can't do anything. Then I went through a divorce, and I really ran out of money. And so like, now I really couldn't do anything. Went from having money in the bank to having negative money in the bank and owing a bunch of people money. So I took a year off for real estate. Like, I just went hard as an agent, and I didn't buy another piece of property until my new girlfriend at the time had said she wanted to buy a multifamily, and she locked it down, and then she couldn't get financing. So she was going to back out of the contract, but it was a great deal. It was a 4-family in Fall River for $120,000. So I was like, no, I'll take the contract. And I just started calling all my attorneys, every attorney I'd ever done the closing with. I was like, hey, who do you know who might be lending? Who do you know who might be lending? And I literally was at a closing with one of my attorneys, and I asked him, and he just looked at me. He's like, bro, like, I would do it. I was like, what?
Okay.
What do you mean? And he's like, yeah, I would do it. And I was like, I was like, why? And he said, well, I'm mostly just for the relationship. I mean, yeah, I know you're going to make money. I know we're going to make money together, but he's like, I do it for the relationship. He made $30,000 on that deal. I made $40,000 on it. Actually, what happened is I actually made 40, but I gave 10 to the ex-girlfriend. So she and I broke up during that property, but I still sent her a check for $10,000 to buy the contract from her because I told her I would, right? So
yeah,
I was, just how I operate. And I think that's one of the reasons that he was willing to lend. And then after that, it was just, I had a reputation for doing deals, taking care of my partners. And I did borrow from attorneys for a little while, lenders, hard money lenders and attorneys. Then it became, seller financing, subject to.
Tommy's favorite.
Yeah, man. Like, a lot of deals, like, I'm buying the deal and I'm like, I don't need to bring any money. There's no capital raise here. Just the money was already in the deal. Like, we bought this $2.4 million portfolio, and all the equity was sitting right in it. And like, it's just crazy. Like, if you don't ask for seller financing, you won't get it. And if you don't ask to take over a mortgage, you won't get it. But if you do ask, then there's a chance that they might just hand it to you.
I love that, man.
So yeah.
That's such an interesting way to start too. You know what I mean? Like, in that kind of environment, like just having that realization of like, oh crap, like, all right, fantastic. Like, we started off with this building, built it up to 5 units. Now what? Like, how do we keep this thing going? Right. And it's always interesting because, like, I feel like most of the like investor population, like, just kind of stops there, and it's like, oh, well, like, gotta save up a bit more money from work, and then maybe next year I'll buy another one, and that type of thing. And I definitely was in that mentality up until relatively recently of like, oh well, like, yeah, I have a HELOC, but it's at like basically 10% now. I'm like, so like leverage and but yeah, no, it's incredibly interesting, man. And guys, like, if you haven't heard like my past couple shows, or like aren't too familiar with like the passive investing type of environment, it's interesting because it's not just like a one-sided, like, oh, like I need money to buy this building, and like you're not getting like 50K from people, you know what I mean? And like that's it. It needs to be like a mutual thing of like, oh, like you'll either get, I don't know, like 10% for 12 months, like if you're investing as debt, or if you have like an equity portion in that deal, it's mutual. Like it's not just like a one-sided thing, you know what I mean? And it's like, to Gualter's point, like there can be such a amazing benefit to a lot of different people, right? Like the folks that are on the completely passive side to be able to, make a return. The folks that are on like, executing the deal, whether it's, a smaller building, a flip, a syndication, what have you, to be able to take on, larger projects like that, stabilize these buildings that might be pretty gross, make the community a better place and kind of the macro. And it's like, there's just like, it's incredibly interesting. And like, it's interesting too, man. Cause like many people don't really know about, some of these alternative and passive type of things of like, oh, well, like one guy, has a ton of deal flow, knows a ton of people with a ton of deal flow, brings them deals. Like there's another part of that equation that can be filled, from a lot of different people in a lot of different ways. But yeah, it's an incredible thing, guys.
Yeah, if I can talk about on that, like I am a passive investor now. So like I hung up the active investor hat about 3 years ago and just told my partner, I'm moving to Florida, handle it. Like I was just like, handle it. Like that's why you got into this. That's why we did this together. And since then, he has been looking to get more into the passive space as well. So he and I started selling that portfolio 3 years ago and just like dropping property after property after property, moving our assets into passive investments that other people are managing. And we've got a mix of debt, a mix of equity. And it's just, I should have done it a long time ago. We've solar financed a lot of our deals. Like we, offered seller financing and just said, hey, look, we want the note. We don't want to pay the taxes right now. We literally just made way too much money. We had already pulled in $2 million by July. By July, we'd already pulled in $2 million. I got to go pay taxes on. So I'm like, I don't want any more. And we weren't buying anything because we actively just don't buy. And so it's been a little transition, man. There's a big tax gain coming. So I got to do what's called a leverage loss now, where I go and borrow money and invest it into another business where I lose money in this year, but it buys assets that are going to acquire money next year. So I'm using Alchemist Nation right now. We're doing big advertising for the summit that's coming up, and the summit already costs like $140,000 to run it. So I got to go and lose about $1 million in expenses and business expenses this year, and not let that money come back until next year. So it's like in long-term kind of acquisitions, like marketing and stuff, that drives the traffic. So it's really, yeah, man, tax strategies, you got to talk about them. Like if you're not thinking ahead and you get big gains, it's tough. Like my girlfriend she's had like a $330,000 tax gain, and capital gain. She's doing a DST, but she's not doing a delayed sales trust. She's doing a Delaware statutory trust, which allows her to basically take real estate and roll into real estate, but it's passive real estate. It's not actively owned. And like things like that, people don't talk about it. And it's not until you have big capital gains that you really do need passive investments and like structures to get out of it. The other one we invest with is our Roth IRA. Like that's another one that we invest a lot of money out of, because I already took the money, man. I already paid the taxes. Like I don't want to pay taxes on anything I earn in it. So we did a self-directed, and we just point that towards other people's deals. I can't invest in my own deals with it. So, yeah. I have to invest in other people's deals. So like that's some of the stuff to start getting passive, money, passive income. I think was the whole reason we got into real estate, man. Like too many investors get in thinking, one day I'll be a passive investor. Like I'm get cash flow, but they want to own the properties when they die. I don't want to own any of it. I just want the checks coming in. I don't want to, because you own it, you got to own it, right? You got to own the problem. So I like to own the paper. I like to own the note. I like to be on the deed. My book, Names on Deeds, is the bestseller. It's the one that sometimes I wear the shirt, right? That's the one that everybody start realizing, like, you don't need, it's not about like work. It's about, do you own the property, right? Like, are you an LP on the property? Are you on the LLC, right? If you're on the LLC, like you're on the deed. I don't need to be out there on the property in the property. Does that make sense? Like, people just don't grasp the fact that passive is better, but a lot of people haven't made the money too. If you haven't made the money, like, you haven't earned the right to passive. You need to learn the active stuff, to buy house with no money down. Like, serve the rich, man. Like, go help me make my money, make more money, and like, help us. Go work for us for a little while, and then eventually you have assets that you can go and do for somebody else. We just keep paying it forward.
Yeah, no, absolutely, man. And I think that's a huge point, Walter. And it's incredibly interesting. Yeah, for a lot of reasons. But it's funny you mentioned that about the DST, because I was just listening to like that apartment syndication show, Whitney Sewell, yesterday, and they released an episode on like what a DST is. I'm like, oh, holy crap. So like, I'm like frantically like, trying to figure out this, how this thing works, like how we can leverage it like with our stuff. And like, it's an incredibly cool tool. You know what I mean? Definitely still trying to figure out the logistics behind that. But
it's like a syndication. It's very similar to syndication. It's just the entity structure it's purchased under allows us to be tax deferred. So it's a very good product. I've raised on it before, and it really works for people who are selling and avoiding capital gains. So it's definitely a product you want to have as a capital raiser or as a passive investor. But I would say that, if you have a capital gain right now and you're not sure what to do with it, then you really do need to start talking to like just people who know what they're doing, like financial planners, financial tax accountants, and then also the attorneys, like estate planners. Like, there's like 3 people you've got to talk to. They don't communicate with each other. It's like you got to get all 3 kind of together in the same room, which is nearly impossible because they all bill for their time. But if you can get your attorney, your advisor, and your accountant together and put a really good like tax plan before you go sell real estate, you're going to be okay. Right, before you sell your business, like, I got a buddy who sold a $2 million business, and like, fortunately, he had done it before, so he knew to put it into a DST. But that was a delayed sales trust, so he was able to just like take bites of the money and only pay tax on little parts, and the rest of it got to earn interest sitting out there as a loan to himself. So there are structures, there are ways not to pay tax, and then you can definitely invest like that DST, the delayed sales trust. You can invest that into real estate deals, like not yours, but other people's. So it all tax deferred. Like, yeah, it's sick, man. Like,
it's cool stuff, man. It really is. And yeah, guys, definitely talk to your financial planners and attorneys, and yeah, you don't want to make any crazy decisions without talking.
And also know most of them know nothing. Like, just go into it and know that most of them know nothing. I don't care if they're your friend or your friend's friend. Like, you got to find the one who knows and owns real estate, because a lot of them just don't, and they have no clue. So like, don't go to a financial planner and be like, hey, how do I do this? And like, be shocked that all they sell is infinite banking systems, or be shocked that all they sell is insurance. Like, don't be shocked that all financial planners are not created equal.
Yeah. I love it, man. No, that's super cool, Gualter, really, man. And it is like, one other thing too that has always fascinated me is like people's thoughts on like unit count and everything, right? And like how some people, kind of treat that, and everybody's different, right?
But I got 4,000 units. Who gives a shit?
Yeah, and it's like,
I got cash flow.
And it's just like,
let's go.
Like, piggybacking on your point, man. Like, this was this, like, my mindset like kind of shifted. I was listening to an Axel Ragnarsson podcast, the Multifamily Wealth. Shout out to you, man. Love the podcast. Always have. But like, he was talking about it in an episode of like, oh, some people, and everybody's different, guys. Like, I'm not hating on it. Like, I'm just, kind of telling you about a little bit of a different perspective to kind of keep in mind. Like, some people are like super bullish on like, oh, like you said, I have like 4,000 units, or like, like whatever that number is, like put it in their Instagram bio, like all that fun stuff, right? But something to keep in mind is like how much does that actually serve you for the goals that you have? And I mean, kind of pronging off in 2 different directions, right? Like, I mean, in terms of like ownership percentage, like, how much of that is actually like yours? Like, if you invest like, one time as an LP in a syndication, and like with like 400 doors, like that doesn't just give you 400 doors on your Instagram bio. You know what I mean? But, and it's the other part of that is like, think about, exactly to Gualter's point, think about where you want to be like down the line. Do you want to have all those units? Like realistically, like, yeah, it sounds fantastic, but does that actually serve you in terms of like, oh, like you're going to have the problems as well. And like, just because you have a property manager managing doesn't mean that you're completely hands off. But depending on the goals that you have, shifting that to a more passive vehicle, whatever that looks like, exactly like you mentioned, like if you're in the LLC, like you have the team around you, whatever that case looks like you could still be an owner, but like you still have the, potentially less problems, like daily management, that type of thing, and still, collecting checks every month, quarter, what have you.
You're talking about
I
wealth
love that
stacking
point.
right now. Like, so we have 3 phases in wealth development, right? So you've got names on deeds. Like an Alchemist Nation, there's 3 steps. Your names on deeds, your trusted team, and then wealth stacking. So in between your names on deeds and wealth stacking is your trusted team, your realtor, your financial planner, like all the 12, the dirty dozen, the 12 guys, gals that you need to get the job done. When you start looking at wealth stacking, you have to do an equation called return on equity, right? What has this deal done for me lately? It's stressful because I still have to manage I have to babysit the property manager. And if you're not babysitting your property manager, you are losing money. My mentor told me this. He had 200 units and he was a property manager himself. He's like, look, if you're not babysitting the property manager, you are losing money. And the truth was, it happens all the time. Anytime I would like take a week off, like I go and be like, oh damn, there went $1,200. They charged me $1,200 to replace the toilet. Are you kidding me? Like, what is going on? Like the toilet cost $100. It should cost the plumber $100 to get it done. And like, they just write the check. It was in a rush, whatever, because it's not their money. Like they just want to get the job done, right? So you do have to babysit the property managers. You do have to stay on top of them. And return on equity says, what has it done for me lately? If it's costing me a lot of headaches, and when you start looking at the equity in it, like for an example, portfolio I bought had a $750,000 equity position. I bought it for $600,000 and it had $750,000 equity in it, but it was only pulling me in about $20,000 a year in cash flow. So think about that. $750,000 is only pulling in $20,000 a year. I don't even know the number on that. It's like, let me do the math right quick. That's 750,000 divided by 20000. That was I did it wrong. So sorry. Whatever the math is, like less than 2%, man. It was really, really bad. And when I started doing the math, I just said, what is going on? Like, what is this? Why is this equation broken? Like, why is my portfolio not making what it's supposed to make? It's 0 to 3%. So 0 to 6%. It's like just under 3% return on investment. So I started looking, I said, man, like if I sold these and I rolled that 750,000 into another portfolio, or we ended up doing just taking $500,000, dropping it into passive investments, and now getting 8% on it and doing literally no work, even after the capital gains, after the taxes. I was like, shit, like what have I been doing my whole life, dude? I went from making 20,000 a year on that portfolio to making 50,000 a year. Then it's the sort of stuff that people don't think about. I did a post the other day talking about condos. I had these 5 condos, 750,000 total value, 500,000 equity. It was the same thing. I went from making 12,000 a year on it to making 48,000 a year on it.
Wow.
And I paid a big I paid like 100,000 in capital gains, but the passive income that I'm getting, that's a debt structure. So that's a little different, but the passive income I'm getting from the debt is still liquid. I can get that money back every 6 months. So like if I want to go invest, it's like liquid. Whereas the other one, the investments like, syndications are illiquid. I'm locked in 5, 7, 10 years, whatever. But they go up in equity. My IRR on those is like 20, 25%. So it's a little bit different. I only see like 8% cash on cash, but I'm seeing the IRR is, significantly bigger. So no one size fits all with this stuff, but you do have to start looking, what has this portfolio done for me lately? Return on equity. And that's a conversation I have with a lot of my friends. It's like, bro, like, have you looked? And here's what I'll tell you. If you're an older investor, older landlord, and you're listening to Kyle right now and you're listening to this conversation, go look at your portfolio, look for the equity in it. And I guarantee you, if you've owned the property more than 4 years, you're somewhere between a 4 and 7% return on investment. Most people are between 4 and 6. And that sucks. Like 4 and 6, even your internal rate of return is no longer as sexy as it used to be. You're probably close to like 16, 20%. Like you're not getting the benefits because the cash on cash, the rents aren't high enough. The equity grew too fast. And now we're at a point where it's possible the market could shift. So do you really want to be in that asset with equity, or do you want to be in an asset that's more of a debt structure? Or do you want to be in a new asset that just took on equity? So even if it goes down in value, it doesn't matter. It's still paying cash flow. Like it's just
Wow.
bigger. You want to think bigger and passive.
I love that, man. So what exactly does that formula look like? I think that's incredibly awesome, man. And I'm curious, like, how can that, like, is that something that can be applied to even like businesses as well? To kind of see like, hey, like how lucrative is this thing? Like as soon as we pop the hood, like,
So real estate
wow.
is business. So like in one sense, it's exactly the same. The only challenge with business is people don't know how to sell their businesses. So like there's a larger group of people who just think of a business in a house. It's like the house is just dilapidated. Like it's just like the house is all the roof is leaking. There's no management. There's no tenants in there, and it's just a lot of work. That's what most people's businesses are. They're not really businesses. They're actually just jobs they have. So like a true business though, there's a lot of equity in most quality businesses that are running without the owner, like a true business, because that's how I define a business. Like if you're involved, it's not a business yet, it's still a job. I don't care how many employees you have. If you're involved, it's still a job. The day you pull back and it's just passively paying you profits and not a payroll, that's when it's a business. That's when it becomes a true business. And so if we're talking about those, yeah, it's the same thing. So if I could sell Alchemist Nation right now, we value it at somewhere around 12, 15 million. So if I could sell it for $15 million, then I can look at how much debt do I have, which is no debt on it. So $15 million gain between me and my partner, two partners now. So I'm 50% owner and the other two are both 25% each. So we would walk away with quite a bit of money, right? It would be a good day. Now, am I getting the return on everything I'm spending there? I'd have to start looking and say, like, what does that pull in? And right now it's somewhere between $500,000 to $1 million is what it'll pull in this year. So I look at it and it's like, I like that. That's a good return. And it's got no debt and it's almost no work for me. So that was something I would probably keep for a while longer because it also generates all my deals, all my capital, all my relationships. So that particular business I'd hold forever. Other businesses, like the property management business, we just dumped it. Like made no sense, right? Why are we gonna? Like it was so hard, such hard work. We looked at it, and maybe there was like 100,000 in equity in that thing, and we're just like, what the hell are we doing? Like, get rid of this business. It's not even worth it. But I've had friends like I got a buddy who did pet grooming. He was a veterinarian. Bought a business for like $500,000, sold it for $2 million to a hedge fund. Like that makes sense. Like deals like that make a lot of sense to go and then passively invest in. And he bought a bunch of real estate with it. That's what he ended up doing. Passive investing in syndications, actively investing. He wanted to get in himself. And he and I just jumped off the phone a little while back, last week or the week before. And he was like, dude, like I'm getting tired of owning the stuff myself. He's always like, I'm so tired of owning it myself. We were talking about like passive investment structures because like it does get tiresome. I'm in masterminds where like I'm constantly loaded with passive opportunities. So I think you got to get in the vein of those and like get around people who have deals all the time and just like whenever your money becomes liquid, it's like, okay, like put it aside and then you wait for the right opportunity and then you invest. And just always have money aside because like, dude, I get hit with deals every single day.
Yeah.
And like they're all good at this point. I was like, how do you pick which one to get into? So it comes down to the relationships. I've told a lot of people this, like they're like, oh, will you invest in my deal? And it's like, I kind of save my deals for like people who I want a relationship with, who've got like a big audience, who have stages, like so opportunities where I can go and speak, or like they owe me a favor. Like that's kind of, I look beyond just the deal now. And it's like, really like, what does this operator bring beyond just their deal? Yeah. And that's me personally. Not most people are just like, does it give me cash flow? Cool. Like, save me from taxes. Awesome.
No, I really dig that, man. And exactly. Cause like, yeah, I think, to your point, man, like being able to use the capital that you have as another form of leverage aside from just the monetary part of it, right? Of like, oh, like how can I, what's it called? Like, how can I mean, yeah, like, make a return and that type of thing, but how much more can I actually, leverage this that can actually like spider web out in different ways with different relationships, get to a higher point, like, meet different people, open different doors with the same 50, 100, 250K,
Exactly.
And like, I love that, man. I think that's cool.
Like my mentor, Vinny Chopra, right? So dude owns $1.6 billion worth of real estate. He's got $200 million funds he's running right now, Series C. and he's in hospitality, he's in assisted care, and he's in multifamily. And like all he does, we talk every Thursday, and all he does is raise capital, talk to investors, let them know what's going on. And I was like, man, like I want to invest in his deals because that gets me access to a relationship of a guy who's got all of this knowledge, all of this information, all of these deals, all these things. And so that's an opportunity you get later on. It's like the podcast, right? This podcast gets you access to people you normally wouldn't have access to hang out with and ask questions for an hour. That's why, I ran the podcast for so long, right? For 3 years, just like reaching up, like, hey,
hell yeah.
How's things in that market specifically? Like, what do you think about that area? What do you think of that building? What's this investment strategy you do that's different from everybody else's? I had Tim Bratz and Rod Cleef and Gino Barbero, like from Jake and Gino.
Nice.
And, like, ask those questions. Mark Victor Hansen was one of my podcast guys. Like, because I wrote books, right? So I was like, hey, like, how do you sell 1 million copies? Like,
yeah,
like,
help a brother out.
help me out. Like, how is it? And his answer, by the way, if you want to know, was email list. He's got a huge email list, over 1 million people in his email list.
Damn,
that was good information. I didn't know. Yeah. Now I can't be like, oh, it's because he's known. It's because the dude built a 1 million person email list.
Yep,
that's impressive.
Guys, always like figure out what it is to. I feel like I can summarize like a lot of our talk for the past 40 minutes is like figure out areas that you can give value to continue building your way up, to the next thing and the next thing, and just keep opening up doors. Just figure out how you can give value, from the smallest thing of like going to a meetup a little bit early or staying a little bit late, to give someone an extra set of hands, to investing, couple $100,000 to give value to someone and build a higher level of relationship and that type of thing. Bro, yeah, it's cool stuff.
100 millionaires. This is how I attracted Vinny. Right? Like, I didn't even go to his profile. Like, he found me on Instagram because he said, "You're building 100 millionaires. I want to be a part of that. I want to get you on my podcast." I was like, "Dude, you want me on your podcast? Like, I want you on my podcast." Like, what do you mean? And it was because I was helping people, right? I was adding value. I was out there doing stuff, and he wants to help people. So you start going up and helping others, you're going to find that the players are really just looking to give back. Like the really wealthy guys, like not all of them, but like a lot of really wealthy people are looking to give back and contribute. So if your cause, your mission helps others, you're going to find that you're adding value. If you're adding value to a lot of people, bigger fish are going to come over and say, I want to do this with you. Because the big fish don't want to do the work. They just want to have a part of it. They want to have the glory. They want to invest. They want to be, for me personally, I love investing in things that make me feel good, that build millionaires. Right? I won't invest in stuff that doesn't build millionaires. Like a lot of my deals have to like be something that I know, like the people who are invested in it, I really like them. Like then I'll invest. Right. But if I don't, yeah, it really does, man. Like as you start investing with bigger capital, it just, the mission, the purpose becomes more important.
I love that, man. That's super cool. To piggyback on that point, Gualter, a question that I love to ask everybody that I'm very curious your thoughts on. How do you define wealth?
Oh, nice.
If you need a minute, totally cool.
Biceps. If you can't flex,
Tom's coming for me, man.
So I'm telling you. So I think that if you can't pick up your girlfriend, or if you can't pick up your wife and carry her up a set of stairs, you're not wealthy. Right? Like something's slipped. Something just in life is lacking physically. I think that if your relationship, if you're not capable of picking up the phone and calling 5 people and throwing a party on the spot with like people who want to mastermind with you about business, life, solve a problem that you got. Like if you want to run a charity, if you can't pick up the phone and call 5 people who'd be down to get on that, you're lacking in relationships. If your family doesn't want to get together for some reason, you're lacking. So that would be a lack of wealth. And then money, if you are thinking about money all the time in the sense that you don't have it or you don't have enough or it's never there when you need it, you're lacking wealth. So I think to the opposite of this would be, I don't think about money because I know it's coming. I've already done the work to build assets that bring it in. So I think a wealthy person is somebody who doesn't have to work for money. But if I'm working, I am getting paid. So I do like that part. So wealth is enjoying what you do and knowing that like money's coming at all times. I think true wealth is knowing loving what you do, loving the people you're around, and loving your body that you're in. And that makes you wealthy, right? It's definitely not how much you make. Like wealth is certainly not related to riches. Like riches is different. I've seen the guys with the watches. I've driven the Lambos, but that doesn't make me feel rich. It makes me feel because I rent them or I'm hanging with people who have them, I feel good. But if I were tied to it and had to babysit it, now I feel like I got to take care of this high maintenance thing. Because I've driven the Lambo and like I know I got buddies who have to fix them all the time. And I'm like, dude, I don't want a car that's in the shop all the time. Like, it's not my thing, right? But they are fun cars. And I will say, if you haven't driven a Lambo, you should go drive one. You should know what it is. You don't put it on your vision board and be like, I want that. And then you like finally own it. And it's like, fuck, I can't take this thing anywhere.
Shit, man, $100,000 for an oil change. Oh my god.
Yeah, man. Like I'm telling you, the cars are not worth it. For me, anyway. I'm not a car guy. I've never been. I'm a relationship person. It's the people I spend my time with that I think is the value. And so to answer wealth it is whatever you fucking think it is. Like that's the truth.
Boom.
You know?
Wow.
Do whatever you want with whoever you want, whenever you want. Be capable physically of doing that, and you're wealthy.
I love that, man. That was such a kick-ass answer, man. Seriously, like it's like I feel like that is a blanket for everything, you know.
It is, yeah, because it's not about the money, man. Like,
no,
but you want to play the game. Like, if you're in the game with us, if you're playing the money game, that's not wealth. That's a different thing. That's the game. Like, that's just stacking up points, you know, playing with your other team members and be like, how many houses did you get? Like, how much cash flow you're getting? Like, okay, like that's possible. Let me see if I can do that now too. Can I surpass you? Can I, like, you know, it's not competition when you're looking at other people and saying I can do better than them. It's just I want to do better, and I'll share all the secrets of how I did it. It's just how can we all level up, you know?
Absolutely,
I think
man.
that's the game. Like that's why people see me and guys like us who are out there just hustling and grinding and like picking up more money, picking up more real estate, picking up more assets. And they're like, when's enough? It's like, dude, like, do I get tired of playing, you know, video games? The answer is no. Like, I'll play StarCraft all day long. You gotta shut me off. Like, at some point, you gotta unplug me from the computer because I'll sit there like crushing people. So it's, you know, does Michael Phelps not jump in the pool 8 hours a day? Like, I don't know what to tell you. You know, like, if I'm gonna be awake, I got to do something.
Yep, I love it, man. Damn, hell yeah, cool, man. But yeah, tell us about I know you have a summit coming up, I believe.
Hell yeah. So the summit,
tell us
you
about
mentioned earlier, like throw parties, right? So I'm a party thrower myself. Been ever since I bought my first house, I was always throwing parties. But like, I renovate the yard, and then I throw a party to have the whole family over to look at the yard. I renovate the roof, and I'd be like, hey, look at the roof I just did. Like, so I always had these projects I had to finish because I wanted to get the whole family together every year. And as I started investing in real estate, I started bringing my property managers together, my tenants. I would invite all my tenants to my Christmas party. All the people who like did work for me, my agents, my lenders, my attorneys, like my investors, everybody would come to this party. And then now as we progressed, the party shifted into 3 fucking days. Like, it's all weekend long. It's no longer like we're just staying one night. It's 3 days, and I bring in my mentors, I bring in my coaches, I bring in the top level players, my business partners, the people who've invested the most in my company, and I put them on stage. There's 18 of us this year, all millionaires. And what we're talking about is wealth strategies that work today, like how to passively invest, how to serve the rich. Like, I'll be real. When you come to this event, like, I'm going to talk about rich people only. Like, getting in there, it's like, I don't care if you're broke. We're not talking about it today. Like, all weekend, we're not talking about the fact that you don't got money. Like, we're going to talk about how do we serve rich people. And I guarantee you're going to have more money. Like, so it's just 3 days of how do we serve landlords better? How do we acquire more property? How do we raise capital? How do we fix our deals better? Like, how do we negotiate? Like, just really, it's about relationships is most of it. Even on day 2 is like night is literally a networking night. We pass out the awards, the millionaire awards, to the millionaires. So we just, all of our millionaires walk on stage, they get an award so they can put it on their wall. And I do best event of the year, right? My mentor will be there. We'll have a billionaire there. If you're like, what day is the best day to come? I put special people on every day, so you got to show up for every one of them.
Yeah,
I'll put at random times. You never know where they're going to be, but you don't want to miss anything.
Absolutely, man. Love it.
We're actually officially 60 days away from the time of this recording. So,
all right, hell yeah,
we're going, man. We're going towards it.
So that I'll drop the link to that down below. Is that cool? Is that where people can check it out? Sign up for it?
Summit, yeah, 100 Summit, and register your tickets. Register now because they do run out. VIPs are running out quick. Executives will run out fast. The general, I can only fit 850 people in the room. So I know at some point we will not be able to, we'll oversell the tickets. That's what we'll do. But at some point I'll have to text people and be like, yo, you didn't make it. You didn't make the cut.
Yeah. Guys, get your tickets ASAP.
It is what it is, man. There's only so many people I can fit in the room. So
exactly, man. I love it.
Mm-hmm.
We're on, last but not least, man, we're on like social media and stuff. Can people find you? Although you're freaking everywhere, so people probably know like where you are. But if there's like anything in particular, I'll put everything down below.
Yeah, Facebook. Facebook's definitely the best place to find me.
Cool.
I'm on Alchemist Nation, the main website that we have there that's built on a different platform. That's where I blog a lot. Like I'll put a lot of really big articles or videos out there. But I spend all my time on Facebook, man. Like I am absolutely on all the platforms for sure, but Facebook's my favorite.
me too, man.
Old school, man. But like, I can't even like. I know I'm supposed to spend more time on LinkedIn, but that's why I hired a bunch of people to bring people from LinkedIn and put them on Facebook for me. Like, let's be friends over here, where I can actually. Yeah.
I'm right there with you, man. I've always favored Facebook over other ones. I was like super bullish on Instagram for years, but I'm like, I don't know. I like Facebook a lot more for like the shareability and the groups and like that type of thing. And LinkedIn, I'm like, yeah, I hear it everywhere that like I should be a lot more present on here, but I don't know. Like I like Facebook the most. I agree with you there, man.
Relationships, bro. Like Facebook understands relationships. They got the groups. I can tag people, right? I can't tag somebody in a picture easily on Instagram. Like, it's not like, is that person there? To confirm that they're there. Like Facebook's like, yeah, I think these are the people, right? And I was going to type yes. It knows that all my friends were there. And so a lot easier, just
absolutely
it's much more social. Like of the social platforms, it's more social. It's easier to get in touch with people. I think that, yes, we lost a lot of contact with these social media platforms for sure. But Twitter is garbage. I think Threads is garbage. I think Instagram is like, it's cute. TikTok's a distraction. But Facebook, man, it is where real relationships are made, where people like really do, like they will not delete their Facebook because their family's on there.
Exactly.
That's why I'm on Facebook. Like I want to be family. I want that relationship at that level. And all the other stuff, I do it because, contribution. I got to contribute. I got to create the videos, but
yep. I hear you, man. Yeah. And
I'm on Facebook, Kyle.
No, I'm right there with you, man. And I mean, like Gary Vee says it all the time, like the context is going to be different, like for different platforms that people go to, so like posting like crazy videos and like lots of fun stuff on LinkedIn might not get the kind of reaction, that people are looking for when they go on LinkedIn intentionally. But if you post it on Facebook, like, fuck yeah, dude, let's go. You know what I mean? Like everything's out like, I like the environment there, man. I definitely agree with you.
It's funny because TikTok's supposed to be all the dancing stuff. So I did finally do a dancing video. I got a stripper pole in my house. So I danced on the pole and TikTok didn't like it. Like it went nowhere. Instagram liked it. What are you gonna do? Facebook was like, my followers just like, whatever. They're like, yeah, that makes sense. I could see. We knew there was a pole in the house. Now we know exactly what happens on the pole. So
that's awesome. Holy shit. But cool, man. Thank you so much for coming on here, Gualter. This was absolutely awesome, man. I am a little bit ahead with the interview, so this one's probably like a month, 6 weeks out, I think, something like that. But super excited, man. Thank you so much.
Hell yeah, Kyle. Awesome. I love how the last thing we talked about was a stripper pole. So, invest your millions of dollars with the guys from Alchemist Nation. I love it. We're so
that's awesome.
We don't have fun.
Exactly, man. Yeah, this was great, man. Seriously, like, thank you so much.
That's a wrap for today's episode. We want to thank you for being a valued listener of the Creating Wealth Podcast. Make sure to visit www.creatingwealth.com to connect with us. Dive into our ever-expanding library of informative blogs. Get access to our private investor portal and explore a wide range of additional valuable resources. Stay tuned for our next episode as we continue to create wealth together.